Welcome to Markets Now. I'm Michelle Brook with Randy Martinson of Martinson Ag. Well, we've seen grain trade, corn and soybeans have been on both sides of steady already this morning. Wheat futures a little bit lower, as well as cattle, while hogs are to the plus side. And Randy, let's talk about the corn market because we've had 3 up days now of fund short covering activity, but we've gotten into some resistance areas now, haven't we?
We have. I mean, we're what 20 some cents off the contract lows right now. We've had three pretty good days, and normally, in the grain markets, things go in threes. So it'll be interesting to see if corn can hold their strength. But not only are we seeing some of the fund buying or some short covering, some of that is being driven by because of the strong demand that we've been seeing, but some is also because of the concerns about the weather forecast calling for that little bit of warmer temperatures as we get into the 6 to 10 and 11 to 15. So I think that's helping to bring some support in. But today's going to be a really important day for corn if it can post gains here now outside of the 3 day run it's done.
Yeah, for sure. Like we said, do we need weather? Is that the one thing that we need to continue to stay hot and dry to push us over these resistance areas? Because I think 425 in that area in the December's kind of capping us right now.
Exactly. Yeah, it's going to take weather. I mean, right now, everybody's looking at the crop condition ratings and the weather that we've seen in the past, which has been somewhat conducive to crop development. Now, all of a sudden, we're going to need something to kind of trim or potentially trim the conditions and the potential yield of the crop, from the yield models. So, yeah, it's going to take weather to do that.
Right. You mentioned strong demand, and we have very tight ending stocks, old and new crop, US and on a world basis. Exports were not that good this morning, though, were they? Marketing
They
year
were
low
not.
for old crop.
Yeah, they were not. And this is what, USDA is foreshadowing kind of sees is that, they normally do see the sales slow down, especially as you get close to the end of the marketing year. And I think we only have like 7 weeks left of the marketing year for corn and soybeans. So sales, it's not surprising to see them slow down, but yeah, to see them come in this morning at less than 4 million bushels for corn was kind of a hit. And it does make us now wonder if we can make USDA's increased projections, which that we did sell enough to be able to break what USDA is saying is our new target, but we're not going to get much above that at this point. It looks like.
You bet. Okay, so got to ask you, the president yesterday came out with a tweet or tweeted that Coke was going to change their formulation from using high fructose corn syrup to using cane sugar. If that happened, what kind of impact would that have on the corn market or usage?
Well, it definitely, if that was to come into play, I mean, I think right now, about 400 million bushels of corn goes to the corn sweetener program. We're into that side of the industry. If we started to see, other companies followed suit, if Coke is going to do that, and then, by the way, Coke hasn't confirmed they're going to do this, but if they do, that takes 100 million bushels off, and that is going to increase. It takes away a demand source. So now all of a sudden we start needing to find another demand source for 100 to 400 million bushels of corn, which start to see stocks increase again. So then that starts to be a little bit negative to the marketplace.
For sure. Soybeans had an 18-cent day yesterday, and we're trying to see a little follow through buying this morning. But what's the story there? Is that we have to have weather in August, continue to be hot and dry for that market to continue to advance here, or what?
Yeah, we do. I think part of it is still a little bit of delayed reaction to the Indonesia thing and the idea that maybe that could help increase our soybean meal exports. I think some of it also is being tied to the rumors that it was China in buying yesterday. No confirmation of that at all. China still has not bought any soybeans for the 25 calendar year yet. But I do think most of it was due to the weather forecast. I mean, they're looking, like I said, the 6 to 10, the 11 to 15, which puts us into the beginning of August as being, above normal temps for most of the Corn Belt. I think that's what got soybeans' attention.
Yeah, I had reported that yesterday too, that the 4.4 million bushels unknown was rumored to be China. We don't know that for sure, but China, they have been sniffing around for some business, either PNW or off the Gulf, right?
They have been, and we've got, the cheaper product right now. So, I mean, right now, it does make sense to come to the US and before we start seeing tariffs go into place. So, I mean, that's the other wild card that would make them want to come in and buy a little sooner. So, overall, I wouldn't be surprised that China starts to buy. They're going to have to buy some from us. It's just a matter of when they start pulling the trigger.
Absolutely. And they have bought 0 bushels of new crop soybeans so far, right?
That's exactly right. So it's, normally we would have, quite a bit on the books by now, but so far there's nothing for China. And that also leads to, the idea that, by the time we get into our harvest, when we start seeing our advantage increases quite a bit more for soybean sales, that we'd start to see something get on the books.
Gotcha. So soybean meal is back lower this morning, and we had a long string of contract lows, but exports this morning were stellar. Can soybeans rally with soybean oil? Because I get it, we're spreading soybean meal against soybean oil because of the biofuels component, but can bean oil alone pull up the market, or do you have to have meal go in that direction too?
Well, it certainly would help, add value to the soybeans to see the meal market climb a little bit. And I think if we can get some of these trade deals done, it will increase the demand, and I think that will help, stabilize the soybean meal price right now. Right now, the trouble is that we're crushing the soybeans, we're using the oil. Oil stocks are not increasing, but meal stocks are. So we need to find that other demand source on the meal side, and then it needs to be exports. So we just need to start getting some countries lined up to do some business with on the meal side. I think if once we get that done, then we'll start to see a little bit better performance in the soybean complex.
Yeah. So you mentioned weather being a little bit of a component for corn and soybeans. I got to ask you, do you think this market has traded the biggest yield numbers now?
I think it has. I mean, normally, we've had really good growing conditions up until now. There are troubled areas out there. There are some really good spots, but I mean, there's also some holes in the areas, and I do think they're going to start to become a little more noticeable as we go forward. And I think that'll start showing up in the crop ratings numbers, and that will, I think, start pulling back some of these yield models that are showing bigger yields right now.
Gotcha. So wheat was a bit disappointing yesterday because it really couldn't follow the rally in corn and especially soybeans. Is wheat still seeing harvest pressure, or let's talk about spring wheat as well, because there is some rain in the forecast, right?
There is. I mean, we're right now we've got rain in the forecast. I mean, tomorrow was supposed to come in with some pretty good rains most of the day for up here. Supposed to hit some of the driest areas, which is the northern tier part of the northern plains, and it's supposed to get up into Canada. So that's where I think the spring wheat is seeing a little bit of pressure in the marketplace because of that. And I do think the winter wheat harvest is causing a little bit trouble. I mean, they've gotten decent bushels. Quality is a little concerning, and it could be that the market is trying to find a home for some of that lower quality wheat, which is causing some of the futures to see a little bit of pressure as well. Normally you see a post harvest rally once we get 2/3 of the way through the winter wheat harvest, and we haven't seen that happen yet. So I would expect that to happen here before too long.
Yeah, that's why I said it's been really disappointing to watch. Specifically on spring wheat, it's not just on the northern plains it's expected to get some rain. Canadian prairies, and they have been super dry. So is that going to help that crop there too?
Well, it'll help. I mean, it'll stop deterioration and it'll
Yeah,
help fill the crop. It probably isn't going to help bring any bigger yields in, but it'll increase test weight, which I guess in the long term does help with the yield a little. It's not going to be a big change from what they're expecting, but it will, at least stop the deterioration and stabilize the crop.
gotcha. Cattle market, as we speak, I think, is seeing a little bit of pressure this morning. But as we have noted many times, it seems like the breaks get bought by the funds. And do you think that will continue here, especially with this big discount the futures are holding to the cash?
In the short term, until we can start closing some of that discount to the cash market, I think we'll continue to see buys on breaks. But we're also getting close to the time frame when we're going to start to see supplies of cattle become available as some of the fall calvers are going to start moving their calves to the marketplace, and then some of the spring calves will start to come here pretty soon too. So I think we're getting into the seasonal time frame where we start to see a little pressure come into the market just because supplies become available. We're up at some pretty high levels, and right now I think this is a battle between technicals and fundamentals, where the fundamentals continue to be strong with tight supplies, and supplies are only going to continue to get tighter, especially with the border closed to Mexico. And if we put a export or put tariffs on Brazil, that'll slow down imports. So the supply side is really what's helping to push this thing.
Yeah, I felt like we'd been trading the Brazilian tariff concerns, the 50% tariff, which will impact beef imports. If we get steady cash or better, then do we say new contract highs again? Because we did manage to do it yesterday already.
I think we would. Right now, I would say we probably have, another $15, $20 upside potential in this market if we continue to see cash trade strong. I looked at the technicals before and thought 325 and 225 were kind of the levels we'd be looking at these markets trading to. And we got to those pretty easy here, the last couple of weeks. So, whether or not, I mean, right now we're up in the areas where, we're in no man's land, and it can be anybody's guess.
Yeah, boxes were down pretty hard, over $4 on choice coming in today. I don't know if that's having an impact on the market here initially, you think, this morning?
Well, I'm sure it's helping to put a little pressure on, but I also think, the fact that we went to new contract highs, we're seeing a little, profit taking, a little bit of hedge selling again hit the market. But again, as you mentioned, every time we see that, the funds come in and become aggressive buyers.
Good point. All right, thanks so much, Randy Martinson with Martinson Ag. That is Markets Now.